Assalamu alaikum friends, welcome to lecture 15 of SBR, and today's topic is the most shortest lecture you will ever see, and also it's short and sweet. It is IAS 27 separate financial statement. This statement, this standard does not come in SBR exam, but it's good to know it in case if you are asked. So here we are only going to cover this introduction itself. This is the only slide we have. That's it. IAS 21 says, okay, if an entity has an interest in subsidiaries, joint ventures, or associates, either they are required or they elect to prepare non-consolidated financial statements, then these are the rulings. Okay, that means any investments in associates, joint ventures, or subsidiaries can be accounted for at cost, at in accordance with IFRS 9, or using equity method. Okay. In separate financial statement, dividends received from an investment are recognized in profit and loss. But if you are using an equity method, then dividends received reduces the carrying amount of the investment. That means from the investment you minus the dividend received if equity method is used. Otherwise, dividend received will be taken in profit and loss. Dividend received from an investment, whether it's a subsidiary or from joint ventures or anything like that. Okay, so this is the only thing you need to remember. If in a separate financial statement, if you're having an investment in associates, joint ventures, or subsidiaries, you can record it at cost or in accordance with IFRS 9 or using equity method. Okay. Normally, subsidiaries and joint ventures, we record it at cost. And if anything, any interest we have which is less than 20%, we deal it in accordance with IFRS 9, and equity method is for joint venture. Sorry, it is for associates. And yeah, joint venture, associates and joint ventures, equity method, and at cost is the subsidiary. So that's it for IAS 27. There is no question on this, right? Even in your past paper, you will not see any question. This is only if you're asked to prepare. Maybe they might just ask not the calculation, maybe they might just ask you a theory part or a discussion question on this, that if a separate financial statement needs to be made, how do you account for it? Then you can say at cost, equity method, or IFRS 9. That's it. So thank you for watching and see you in the next lecture. And if you haven't subscribed to my channel yet, please do subscribe.